Your business bought stock worth $40,000, sold it for $60,000, a clean $20,000 profit this quarter. But your books shows a $60,000 profit in May and a $40,000 loss in June. Same business, same numbers. So did you mess up your books, or was June actually that bad? Don't worry, neither. That's just a reflection of which accounting method you're using to record your books. There are two main ways to record income and expenses: cash accounting and accrual accounting. And if you don't understand the difference, your numbers can genuinely lie to you. First, one thing to get straight: profit and cash flow are not the same thing. Profit is whether you earned more than you spent. Cash flow is simply how much money physically moved in or out of your account. You can make a sale today and receive the payment weeks later. You can receive stock today and pay the supplier next month. That gap is exactly where these two accounting methods start telling different stories. So, the cash method. This one's simple. You record income when cash actually comes in and expenses when cash actually goes out. Here's how that plays out. You bought $40,000 worth of stock in May, but you do not pay the supplier until June. So the expense gets recorded in June, but you made the sale for $60,000 and got paid in May itself. So the income gets recorded in May, which means May shows sales only and June shows the expense only. So May appears to show a $60,000 profit, while June appears to show a $40,000 loss, even though across the 2 months, your business actually made $20,000. Cash method simply follows your bank account, nothing more. That's exactly why so many freelancers and small businesses use it. It's easy to track and cheap to maintain. But here's the catch. Because it only tracks cash movement, it can make a genuinely good month look terrible and a rough month look fantastic, even when nothing unusual actually happened. That's where the accrual method comes in. Here, revenue is recorded when it's actually earned, and expenses when they're actually incurred, regardless of when the cash moves. It runs on two principles. Revenue gets recorded once you've delivered the work, and expenses get matched to the same period as the revenue they helped create. So under accrual, you'd record that $40,000 expense in May the moment the stock was used to make the sale, even though you hadn't paid your supplier yet. And you'd record the $60,000 in sales in May too, once delivered, even if the payment came in later. Now the picture's clear. May shows a clean $20,000 profit, right when it actually happened. And that's exactly why every large business and most accounting standards require this method. It shows what the business actually earned and the cost connected to earning it in the same period. It also helps track money customers still owe you through accounts receivable and bills your business still needs to pay through accounts payable. But accrual accounting does come with more work. Your business may show profit before the customer is actually paid, so you still need to monitor cash flow separately. A profitable business can still struggle if too much of its money is sitting in unpaid invoices. So which should you use? If you're small and mostly want a simple view of your cash, the cash method can work fine. But the moment you want an accurate read on real profitability, or you're managing inventory, credit, or growth, accrual is what gives you the real picture. Your business structure, reporting obligations, tax rules, and local requirements may affect which method you are allowed or expected to use. So do not switch methods casually without speaking to an accountant or tax professional. Honestly, this is one of the most common places I see founders get confused. Not because they're bad with numbers, but because nobody explained which method their books were actually running on. At BizFile, we set this up correctly from day one. Keep your books accrual ready where it matters and make sure your monthly numbers actually reflect what's really happening in your business. If you want your books telling you the truth instead of a confusing half story, BizFile's link is below. Book a free consultation and let's get it sorted. Subscribe for more straight talk breakdowns like this one. No jargon, just what actually matters. Know your method and your numbers finally start making sense.